Good morning, good afternoon, and good evening to all of my crypto fans out there. You have your moderator-in-chief, Robert Rizak, on the line, along with his two compatriots, Carlos Sendejas and Matt Reed. Both of them are co-founders for DeepQ Digital. It's happy hour over here, so we always have our beverages in hand. I know on the last episode I was trying to get a workout in. I gave up on that today, so I just went. Yeah. I promised I would have a shot and a beer, and so I've got my tasty Modelo here, Negro. It's very, very tasty. And then I have this in my very own DeepQ glass here. I have some bourbon. I actually don't even know what brand bourbon it is, but it's quite delicious. Yeah, it's quite delicious.
Starting Fridays, you mean to go on.
Making up for last weekend.
Yeah, I will tell you that. Spoiler to all of our fans. I had a little get together with Robert at his place. We got the families together. Met the kiddos. Future DeepQ love connections between our infant child. And I had a glass of that Modelo Negro. I'd never had it before. It is quite delicious. Quite delicious.
So, I'm curious. Is it? So I'm drinking Volition. If you can see that, it's a black lager. So is it just toasted? They toast the shit out of it.
It kind of tasted like a
like a lager stout, if there is such a thing.
But by the way, we are all currently drinking dark lagers today. I've got a Dunkel lager from East Rock Brewery in New Haven, Connecticut.
East Rock.
So here's to
the dark beers. You know,
did they sell that at Walmart?
I love that. That wasn't even planned. We're just all drinking dark beer. What must be
it's
that
fantastic.
Time of year?
It's that time of year.
Cheers.
It's like a boutiques, or where do they sell it at?
Well, I got it at the most boutique of stores you can possibly find out in the burbs, which is Whole Foods.
Whole Foods. Fantastic.
So we went to Whole Foods, and I treated myself to a non Bud Light, because you know what? Whole Foods is bougie as fuck, and they do not sell. They don't sell Bud Light. I was very angry.
Really?
I was very angry at them. No,
we should write them a letter.
I'm going to be like, listen, guys, you're not that fancy, okay? Everyone can have a Bud Light every now and then. It's not the end of the fucking world. I'm not complaining. This is fantastic beer, but you know, Patriot Water is Patriot Water.
I got this little guy. It's the boutique of Queens. I got it at a little place called Dwayne Reed. It's quite specialized.
We had a girl from Ireland on the sales desk when I worked at Deutsche Bank, and she had this hilarious story where she had her family over, and they're like, "Oh, should we go to the Douane Riade?"
Douane Riade.
I love it.
Quite, yes. Please, please.
So if you ever want to be fancy, just stop off at the Douane Riade and get the most exotic of boutique beers.
Douane Riade. I love it. Guys, got some things to catch up on. I know on the macro front there wasn't a whole lot. I think there's some CPI figures coming out down the road. I was at a conference this past week, and a lot of people were just talking about overall inflation and how they see that inflation is going to be around a little bit longer, which I think is something that a lot of folks play into. But a lot of those conversations are just around consumer and what's going to be happening with the consumer, because we have seen wage inflate, wages been able to increase a bit, but it hasn't been able to keep up with the same rate of inflation. And you see these upticks in credit card spending. People are reducing their savings accounts. So it's kind of putting a little bit of an additional squeeze on the consumer. So it's kind of the mood that I got out of the conference was that things look rosy. The economy's plugging along, but there are these kind of warning bells that kind of been being rung. Those are some takeaways that I found. I don't know, gentlemen, what you guys are seeing out there.
No, I think for me, we were actually just talking about this the other day, Matt and I, when we were thinking about sort of the price of Bitcoin and what's baked in. So prior to Silvergate, which we will touch on, the mood that I had anyway was basically, if you think about like the economy is on a straight line trajectory, and the market is doing what the market is doing. I think the Fed's been pretty upfront about what it views inflation to look like, and the terminal rate, sort of like it's here to stay. We need to fight it, and then the market has like these irrational swings up or down, where they say to themselves, "All right, oh man, this is going to be the best fucking thing ever. Inflation's totally tackled." And then, you'll get like one or two data points, and then it'll be like, oh man, this is the worst fucking thing ever. And I always make the analogy that it's very similar to like if you're trying to track your weight and lose a few pounds.
Yeah.
If you measure yourself every day, there's going to be some fluctuation in the data, right? Because there's, like water weight, time of day, all sorts of, exogenous variables that could contribute to that. But what you really want to look at is the long-term trend. And so I think the long-term trend, inflation is doing exactly what inflation is doing. I think we had a couple data points that were not fully as expected, and the market got into a bit of a tizzy, versus maybe, in late January, we had a couple data points that were great, and the market got itself into a bit of like a irrational exuberance mode. But all things considered, I don't think the narrative has really changed. And I think we're kind of on the same path that we've been on, just with some sort of like, modular, cyclical variations in people's expectations.
Yeah. It's kind of, maybe this is why I stopped listening to the news, because to your point, it's like,
but listen to us, because we know what we're talking about.
What I mean is like different talking heads with suits on. On news channels.
Exactly.
Yeah. So it's to your point. Yeah. It's like kind of, I've heard a lot of these stories being told before, but it keeps following that trend line that you mentioned, Carlos.
Well, I think that as well, especially in crypto, we have seen at least, forget today, overnight rather, the last 3 weeks, we've been very tight range bound trading. Not much volatility, to be honest. Consider more vol in equities, for instance, which is interesting paradigm anyway. That crypto is less volatile than leading risk on assets. So, we'll come to what happened with Silvergate, because that's a big spike in vol.
Yeah.
But in general, people are just trying to wait and assess what's going to come out. I think it's a bit too early to panic or.
I would before Silvergate, I would have told you the trade probably until the next CPI print was to buy anything at 23K, sell anything at 24K, and then just rinse and repeat, and then get to flat by the time CPI rolls around. But Silvergate kind of threw a wrench in that, so I guess we may as well fucking address the elephant in the room and talk about what the hell is happening with Silvergate.
Yeah. It's just dude, this reminds me of so much of the global financial crisis and the traditional financial markets. It's like it is March, so we are approaching March Madness, and the brackets kind of remind me of it. It's like the massive consolidation we are seeing in the crypto market is reminiscent of you see the basketball players during.
Well, here's what we should do. Let's put together a bracket of all the currently standing, exchanges and crypto providers out in the universe, and just see who's the last man standing at the end of it. So my money is on Coinbase and Circle in the U.S. That's my final of the last man standing bracket.
So those are good bets. Those are very good bets. Yeah. Hey, you want to maybe we should it might be helpful just to run through some history on Silvergate. I know there seemed to be some rattlings happening with Silvergate even before this, right? Like when did news first start to break? I think it was probably around Christmas time or before that, November.
It was late last year. They had to lick. I think they wrote down a 700 million loss or something close to that. It was a pretty substantial number, and since then, now they've had various high-profile clients. Carlos mentioned two, Coinbase, Circle, pulling funds from there. So they have a classic run on the bank. and that's a problem that it could impact liquidity in crypto. And that's kind of what we've just seen. And the question is, well, why is that? Because in theory, crypto is completely orthogonal to a TradFi market. It shouldn't really make any difference. I saw a post, someone was joking that Satoshi would be like turning in his grave if he knew that one bank had managed to tank the price of Bitcoin by like $1,000, which made me chuckle a bit. And I kind of agree with, but I mean, we were chatting about this earlier. It was clearly a liquidation event that took place. I think over that period, I was looking at the derivatives for Bitcoin, the liquidation on futures markets.
Let's take one step back so this can be like evergreen. Last night, Thursday, March 2nd, around roughly 5 p.m. Pacific time, Bitcoin sold off from like 23,400 to just under 22,000, and then bounced back up to 22,000 ish. It's a pretty large sell-off in Bitcoin. And to Matt's previous statement, yeah. And to Matt's point, right? Like, there's a difference in my view. And I've been around. I'm an old head when it comes to trading. There's a difference between the market selling off because of fears and the market selling off because of a forced liquidation. And the market selling off of fears usually looks like the market grinding. Like, news will happen. There will be an immediate reaction to that news. And then the market will continue to grind down, with potentially some people will get liquidated along the way. So you'll see a grind down and then a pop and then a grind down and then a pop. But whenever you see the market just instantaneously sell off, there's usually a hallmark to that, which is someone who has no skin in the game. So this is usually like somebody in a back office type of role who is just given instructions. And this usually has to do with like covering margin accounts or covering loan collateral. We'll basically say, all right, I've got a chart that tells me when this level is hit, or when someone senior tells me to get out of the risk position, you just get out of the risk position. Doesn't matter how big, doesn't matter what the market impact is. We just do what we're told. And that's when you see those massive market sell-offs, because it's just someone following instructions. And last night had every telltale sign of a market that was being forced liquidated. So that's my view. I'm nearly positive that was Silvergate liquidating, something on their balance sheet that was crypto denominated, so likely loans that they have on crypto or that were collateralized by crypto. And the funny thing was that it happened almost exactly at 5:00 p.m. Pacific time, which means at the end of the day, they'd done their risk and they're like, fuck it, we're out. Mm-hmm. So I think there's some massive implications of that. That are somewhat interesting. But I mean, I don't know, Matt, if you have any color or insight on it. But to me, that's sort of just based on what I see, that's my view.
Yeah, and I mean, I tend to agree. It seems like a forced event. I don't think people were waiting around. He had heard the news that Silvergate's in trouble, and then all of a sudden Asia decides to sell the entire market all at once. I generally don't think that's the case, especially at this magnitude. But what I was just about to get into was the side effect of that is when you have derivatives exposures on top. A lot of them will have margin requirements. So for Binance, for instance, and several of the OKX, etc., people with long positions on there, as soon as the price gets too low, you then have to post collateral. And I think I was checking the website, it's like CoinGlass, and it was showing that like 75 million at least in that short window got wiped out just from loan liquidations, just from futures liquidations, nothing else. Which is quite a relatively big number for a short flash crash. So I think there was a little bit of that compounding it as well. But yeah, definitely the initial and the timing a suspect that they just had to close out of risk to lock in funds. And as a bank, they have capital requirements they have to hold for reg purposes. If they drop below that, then their only option is to liquidate whatever they've got. So I can totally see that's a plausible scenario that happened. Obviously, don't know for sure, but it's certainly plausible.
What do you think are some of the implications for Silvergate? I mean, there's not really. Do you have like Signature Bank? There's not really a whole lot of options for crypto-related businesses nowadays for regards to banking relationships, are there?
There's not that many.
Yeah.
We've joked about this a couple of times when we started DeepQ. It took us at least a month just to get anyone that would let us bank, and then we found a couple more. But I mean, there's Silvergate, Signature, MVB, and probably like Mercury will allow you to transact with some of the exchanges, but what that's for, if I have to think quick, and there's probably a couple more that I've missed, but there's not many. And now if you take out Silvergate, which is probably the biggest at the time, the issue really is then if those banks, and we've heard this from regulators about, they need to make sure they don't have just crypto exposure, they need to make sure their capital efficiency is there. Like the risk is if there's any extra regs, then it's just going to stop that TradFi fiat on ramp that we've got currently. It just won't be there. That's like the concern.
Yeah, like it doesn't really. I mean, today there's been a lot of like saber rattling from the SEC, but have they really? I can't recall them coming. This liquidation that was happening with Silvergate, that was much more like loan related, right? It was just more like a business related, right? That's a little bit different than regulations like we see with Kraken and their staking program, for example.
Yeah, so I think the key here is that it does take a little bit of what I'd call management foresight to basically say we're going to run the risk of exposing ourselves to crypto counterparties. Right. So like every bank, when they take on a client, has to go through some sort of like KYC AML. And for the people that are not familiar with that term, it stands for Know Your Client / anti-money laundering rules. And so if you're a bank and you take on a crypto client, their big concern is basically like, are you using that crypto relationship to circumvent money laundering rules? Are you using that to circumvent capital controls? Because there's any number of different ways to sort of like, once you get into from fiat into crypto, there's any number of different ways to sort of like, maneuver around and move cash back and forth in ways that like could be unbecoming. And so in their mind, all banks have this thing called the suspicious activity report that they need to file when they see cash movements that go beyond a certain limit. And my guess is that a majority of banks out on the street have done their sort of internal calculus and said, we don't think the opportunity is big enough to get involved in crypto to then have to handle all of the additional monitoring that we have to do of all these counterparts, because we can't be sure what they're doing once they get their money into crypto. That's part of the problem for Silvergate. It's not the direct problem. I think that it's a secondary problem in the sense that because there's no other people that are willing to get involved, Silvergate was one of the only guys that banked crypto firms. My major problem with them, I think we discussed this previously, was that like, I think they've been around since like 1980. And previous to that, they were this like sleepy little like California bank that really didn't do a whole lot. And then suddenly they got into crypto, and almost like the entirety of their business was doing crypto related things. So they're the firm that has like loans out to Michael Saylor to be long Bitcoin for like $3 billion at like, 33K. And they're massively underwater on that.
Yeah.
And they're the ones who bank basically every U.S. crypto exchange and U.S. crypto fund on the, in existence. So I think the problem is that because they're so concentrated in that industry, When crypto like had its FTX moment and everyone was withdrawing funds, or for that matter, when funds just like imploded overnight, suddenly they lost like 70% of all deposits. So even if you're a totally above board bank and you're doing everything right, banks are by design, they're not designed to handle a 70% run in any of their deposits. So you get to this point where it's like, okay, cool. I don't care how well run of a bank you are. If you've got concentrated liquidity on a bunch of a single U.S. entity or a single U.S. or a single industry, when that goes down, you're fucked. And so that's exactly what happened. And then, ultimately, as Matt was saying, when you're a bank, you also need to make sure that you've got certain thresholds of liquidity. So let's say you have $100 on deposit, right? You don't need to keep $100 in cash sitting at the bank. That's not how banks are designed. Well, what you typically do is you would say something along the lines of okay, I've got $100 on deposit on any given day. Clients could come and ask me for $10, so I'm going to keep $10 in cash. And the remaining $90 I'm going to put into, investable securities of some sort, of varying tenors and liquidity ranges, such that I can meet the demands of my clients as they have them. So if you've got $10 in cash and then clients ask for $70, you now need to go out and sell assets to cover that, because that's how you fund yourself. You keep that. And that's the problem, is they, back in December, had to sell something several $1 billion of assets at a $700 million loss. Well, that's the entirety of the profits they had made doing crypto, and they were on life support already. Then you factor in any other sort of downturns or any other. The problem then is that I was talking to a good friend of mine in the crypto industry, and he's like, all right, well, ever since that happened, we've been telling every client we possibly could to move to a different bank. So they lost initially confidence, 70%. Yeah. But once confidence is gone in this industry, you're totally fucked. So everyone's been moving money off. And I'd imagine that it's just been a circling the drain moment ever since.
Yeah, to the point where they're now not potentially viable. And I think that's what's put the nail in the coffin for them.
We'll I think back to the old savings and loans in the U.S., right, in the 1920s, and it's kind of, there could be very very stable businesses that might go through a period of volatility, and then you lose confidence, and without having that backstop, you could see these firms get blown out. It's kind of there are big problems that crypto's here to solve. It's just there's a long road ahead. How do you guys, in thinking about that, I know this news is just broken recently, but curious. I think for the audience, I'd be really curious too to hear how we think that it's going to evolve. Right? Are we going? You mentioned before maybe we'll have to have a little bit more regulatory clarity. More likely, perhaps more big established banks will move into this space versus new incomers because they just don't have the resources to manage KYC, AML processes. Yeah, to me, that's kind of what I think is Yeah, go ahead, Matt.
I was going to say, maybe we could talk a little bit about what you should do when you have this kind of thing, and then maybe we could ponder, what might be the future. But I think when this news comes out, you need to assess immediately who has exposure to Silvergate. That's the step one. Do you? If you do, then cut immediately. And the reason for that is your deposits will be covered, but only up to the FDIC insurance limit, which is $250 or $500K. If you have that there, great. If you have more than that, and it's going to be a pain in the ass to get it back anyway, because those things are not notoriously fast. But if you can move funds to another bank, then do that. And then the second question, and this is the big one, is out of the exchanges that are currently in operation, which of those have large exposures still to Silvergate for their operations? And that's kind of and this kind of goes back to contagion from a lot of the big players we saw last year. It's for the lending businesses, it's who now has exposure to Silvergate, given that they're likely going to go under. They should have the money, because then should have the deposit somewhere. It's just going to be a while to recoup it back, because I have to sell more securities, that kind of thing. But yeah, it's then like, is that going to be an impact on the businesses that you deal with? So yeah, we're kind of keeping a close eye on some exchanges right now. And playing it by ear. Take stuff off exchange when you can. Basically, if you don't need them to be on
just
there
for trading,
the old story, if you got keys for them, put them in your wallet and just sit on that for now.
Yeah, I would tell you very much in all of these scenarios, it pays to be paranoid. And something that Matt and I do on a routine basis is we stop to see who's on the other end of wire transfers when we make them, right? Because that's actually a pretty telling piece of information. If you send money to an exchange and you see it being routed through some other bank, just keep that in mind, because that, and check your wire transfers to see what banks that's routing through. If you see Silvergate on there, I'm not telling you to be wary. Well, I am telling you to be wary of that exchange.
As of today, definitely.
It always pays to be paranoid in these situations. Like, you never want to be caught in a situation where your cash is locked up in some bankruptcy process. And it's unfortunate, because that's like, you'd like to believe that these crypto institutions are sound, but if we've learned anything from FTX and previous iterations of crypto, it's always be vigilant.
Yeah, and I think about your comments about how do you kind of avoid it? What the race steps possibly to take? It's difficult, because really this is a bank run, and as Carlos said, on a very niche industry, which is very concentrated in Silvergate. They kind of did a one-trick pony bet. Put all their eggs in this one basket and didn't diversify. And that's the real key. And I think the SEC have sent letters out now to some other banks to say, we recommend that you don't have concentrated risk with crypto counterparties, because they might just pull their funds. You better make sure you can cover, given it is volatile, right? People will just pull funds. And we've seen what happened with FTX. Everybody did that because they didn't trust the exchanges in the first place.
And so this is actually one of the important things about Silvergate, which a lot of people, we didn't fully understand until we actually got into the industry, is that they have the Silvergate Exchange Network, or SEN, that they basically treat as sort of their own private blockchain, where they allow you to transfer money instantaneously, 24/7, across a number of different exchanges. And where that's useful is the majority of crypto market makers today spend a vast portion of their time basically seeing a price dislocation to buy at an advantageous level and sell at an advantageous level on a different exchange. And that doesn't work unless you can move capital around quickly. And Silvergate solved that problem. The only other bank that allows you to do anything similar is Signature. So, I mean, the implications if Silvergate goes down is that there are likely some exchanges that have exposure. And I'd like to think that those exchanges who had exposure to Silvergate have been prudent and exercised a little bit of risk management, because Silvergate has been circling the drain for months at this point. And then most importantly, you kind of want to understand, if that doesn't, if that mechanism for moving money around quickly stops, then what does that mean for liquidity in crypto? And my guess is that you'll start to see more dislocations in prices, and you'll start to see more price instability across different venues, because it will become more difficult to arbitrage out those things. Because the only way to do that is to be very, very reliant on the fact that the bank that you're transferring money back and forth from those venues is reliable and fast.
Interesting. Was a payment network, I mean, for some of the audience, is a payment network kind of similar to what you would see with PayPal, for example? It allows instantaneous payments, but it's because it's on that one platform that those payments are able to.
Yeah, they have
take place.
Their own blockchain where they manage internal payments. Yeah.
Got it. Got it.
And a couple of places have that. It's not just Silvergate, but a few of them do.
Yeah. Most notably, Signature has one called Signet that I think a lot of people have moved over to. So Signature it looks like it's like kind of the winner in the relationship.
Yeah.
Although it certainly has its own share of problems as well. But I think in the grand scheme, most everyone in the crypto industry, for lack of any other option, is moving over to
Signature.
Moving over to Signature. One
is
notable,
that a stock pick? Carlos's stock pick for the day?
This is not investment advice.
This is not investment advice. This is for entertainment purposes only.
That wasn't obvious.
Yeah. If we've learned anything from our sports podcasting world, our good friend Pat McAfee, who's getting sued by Brett Favre right now, allegedly, and it's been reported that these things are happening. It's not a fact. This is no investment advice. Blah blah blah. Carlos is covering his ass.
Anyway. Yeah. It's kind of, I mean, like also seeing how, just like overall SEC regulation. When I had first read the news about the Silvergate, my first thought was like there's some kind of regulatory crackdown on it. Yeah, to your point, like it just feels like SEC's indication to have a more broadly diversified asset base among banks. I mean, that does make sense, right? I mean, when you have like an 80 vol asset, and if you have 100% of your assets in that, and you're trying to manage bank deposits, that can become extremely problematic. Although maybe you can, but you just like your reserve ratio has to be like 80% or 90% or something.
Yeah. In which case, it's probably not that profitable then at that point. So,
well, unless you charge like 50% interest. I mean, if you have like a 200x expectation on some of those assets, maybe it makes sense. But yeah, to your point, it's hard to make a profit.
Yeah. Well, I think this is where, this is the problem that you have where in the same thing where it's like if you have very, very draconian regulatory policies around a new asset class, it's going to push it to the fringes, right? There's a reason why some sleepy ass bank out of La Jolla, California was like the world's #1 crypto bank, right? It's because the regulatory regime did not allow the large incumbents like JP Morgan and Bank of America to feel confident taking it on, right? It's like, I'm almost positive, like JP Morgan, they're profit motivated. And so like if they see crypto moving, unless the regulator says, no, don't touch that, they're going to fucking touch that because, right? Like if I know one thing about the global financial system is that banks want to find a way to generate profits. And the best way to generate profits is to find a fucking 80 vol asset and make money off of that asset. So, so the fact that like these small banks have been forced to come in and be niche players is in some ways more of an indictment of the regulatory regime in the US, more so than it is the fact that like Silvergate found itself in a position where it was suddenly like the world's premier bank in crypto.
Yeah. So, I mean, this is no knock on Silvergate. I'm sure they're very hardworking individuals, but I can't imagine like the risk management teams at Silvergate are at the same like level as JP Morgan. So like just the resources, right, are so much larger as well.
No, I mean, I think I'm going to make a corollary because I actually have a fun story about this, which is, if you remember, there were 4 banks do you remember Archegos Capital?
Yeah.
It was that Tiger Global alum that like for some god-awful reason was allowed to build up like, $30 billion in personal wealth by just YOLOing and levering himself to the tits.
I remember that.
And he had 4 prime brokers, right? Goldman, Morgan Stanley, BNP, and Credit Suisse. And this is anecdotal, so don't quote me. And I have no sources, so say what you will about it. But the rumor is, across people that I know that may or may not have been on this call, is that when he had problems with his fund, he was on the call of all his prime brokers, and basically agreed on the call that they were not going to sell any of the assets, right? The rumor is, allegedly, that, not financial advice, that Goldman started selling in the middle of the call. Morgan Stanley at least had the common decency to wait until the call was over before he started selling. BNP was like, oh shit, someone's selling. You should probably do the same. And then Credit Suisse was like, everyone said they weren't going to sell. Guys, I thought this was what was going to happen. And we all know what happened to Credit Suisse, like $4 billion torched. And, it suddenly becomes an existential threat that doesn't, exist until the Saudis come and buy it. So like the moral of the story is that it actually, there's a bit of game theory and there's a bit of, there's a bit of sort of like amorality that you need to maintain in order to be a really good risk manager. And that's part of like having a decades long risk culture. It's part of having seen a lot of different things and knowing, when to cut risk, when you need to. And it's not for everybody. So, I would actually say that maybe where Silvergate really fucked up is by issuing BTC denominated or BTC collateralized loans.
Yeah.
Because they
had no need to
if you're just if you're just providing banking services that allows people to transfer money, that's like, great. People pull funds. They're fucking fantastic.
I mean, I guess it's a bit skewed now because the interest rate's so high, but you could still take a good chunk of that money and invest it in something that will return a few percent, which at the same time that 5-10 years ago, everything's zero anyway. So,
do you think that was some of the reasons why people were looking to charge so much for a business banking account that if you were crypto related, was just that they weren't able to do like if it was pure banking, like they aren't able to really do much with it because it's such a volatile asset.
You mean to open an account and have it maintained?
Yeah, like maintenance, like even maintenance. Like I think when I chatted with you guys when you guys were trying to find banking, just like some of the pricing that people were charging, the fees were just seemed like
I think it's just because they can,
high.
Right? There was no one else, so that you go to one, they're like $50,000 a month or something, and you're like, what? Then you go to another one, or they'll say, okay, go on, we'll do it for $5,000, and you're like, still, that's ridiculous. Why would I pay $5,000 a month for like banking service fee, like as a fee?
Yeah.
And they would kind of come down, but because they know you had nowhere else to go, they would just try it on.
Look, listen, I'll fucking name names. MVB was going to charge us like $5,000 a month and ask us to have $5 million in assets sitting in their account to open up a checking account, right? Silvergate was different. Silvergate was going to have like $100,000 minimum and charge $500 a month, which, to be honest, for just banking services, like I could actually buy that, right? Like that seemed reasonable to me, because I know because I've worked in banking that there is some extra degree of compliance that they had to take care of for crypto, and we're pretty above board, and that's the way we structured the business. And so I was like, listen, if we have to pay extra for a proper bank that's going to do this for us, then like that's fine with me. I think Signature came on board and they charged, basically like normal business checking account rates. And I'm like, well, this now becomes a no-brainer. Let's go with them. And they were diversified in a number of other different types of like things. But that being said, like, if you're a bank and you have just general business checking accounts, meaning you're literally just a crypto fiat on-ramp. To me, charging a little bit of extra for compliance reasons to have like an extra compliance staff member who's like reviewing, wire transfers and that sort of stuff is completely fine. But like I said, I think anytime you get into the business, and this is true of any, like the hallmark of any bad banking business where things went tits up. And this is what we learned in the global financial crisis, is that you have these quants that make these models about like what a stressed asset looks like and how much you need to charge for collateralization. Right. So let's say, I've got like $1 million worth of Bitcoin, and I go to Silvergate and I'm like, cool, I'd like to take out a loan in cash based on my Bitcoin. I'm like, cool, we'll post your Bitcoin as collateral. Well, how much Bitcoin do you need to give them in dollar terms to get a $100 loan, right? Do you need to give them $100 worth of Bitcoin? Well, that seems kind of stupid for an anti-vol asset, because tomorrow that could be worth $20 worth of Bitcoin, right?
Yeah.
And so that's where I think you get into problems, is like you just look at, historical vol. And you're like, oh, well, this could go up and down by X amount.
Yeah.
So I'm going to over collateralize it. Yeah, I'm going to over collateralize it. I want you to give me $120 worth of Bitcoin to get a $100 loan in Bitcoin. Well, maybe if you're dealing in like Eurodollar or like the U.S. Treasury, 10-year rate or something like that, that's an appropriate, loan to value. But is that really appropriate for Bitcoin? I don't think so.
But the appetite, right? Like, there's not really going to be much of an appetite for that either. Like, what's going to be the actual demand for it either?
Yeah.
Yeah.
So
I think that's a nice sigh. I'm like, that seems like
it's my. This is why we can't have nice things. Sigh.
Oh man,
I do the same thing when my toddler is fucking like just destroying cookies and getting chocolate chip residue on the couch.
Boys, I think that was it for today. I'm glad we kept it a little bit more isolated on Silvergate. This was a good conversation. I enjoyed it.
Yeah, I think we're going to have a lot more macro to talk about next week. But
yeah, it's a lot more on
a sleepy week, other than Signature falling off the map.
Yeah, boys. All right, ladies and gentlemen, thank you so much for joining the Deep Q Cast. You'll be hearing from us in a week.
Yeah, thank you. Bye.
See you later. Bye.
Cheers.